Welcome to the module on Introduction to Accounting. Learning objectives. How an accounting process is carried out. Significance of financial statements. What is reporting role of auditors? Accountancy is a language of finance. Accounting serves as an effective tool for measuring the financial pulse rate of the company. It is the process of reporting, recording, interpreting, and summarizing financial data. Financial data is the name given to the actual transactions carried out by a business. For example, sale of goods, purchase of goods, payment for an expense, etc. At the same time, if mother makes food for a child, it is not a financial data which has no scope for accounting, and need not be considered, as she is making food out of natural love and affection, and does not have any financial impact. Whereas the same mother, if she works as a cook at a restaurant, and prepares food, and sells, becomes a financial transaction to be considered in the books of accounts. These transactions are recorded in books of primary entry by accountants. These are analyzed in the books of primary entry, and totals are posted to the ledger accounts. Using ledger accounts, an accountant prepares profit and loss account, which reports the profits or losses of the business during the accounting period. He also prepares statement of financial position, which is a statement of assets and liabilities of the business at a point of time. The documents which communicate these findings about the performance of an organization in monetary terms are called financial statements. The statement of financial position and profit and loss accounts are the financial statements of an organization. The objective of financial statements is to provide information about the financial position, financial performance, and cash flows of an organization that is useful to a wide range of users in making economic decisions. Accounting can be explained by the below-mentioned diagram, wherein a clear link between the books of accounts and the various activities of accounting can be understood. Recording journal, classifying ledger, summarizing trial balance, interpretation statement of financial position, statement of profit and loss, statement of cash flows, director's report, auditor's report, and complete annual report. Financial statements provide information about an organization's assets, liabilities, cash flows, equity, income and expenses, including gains and losses, payments by, and payments to the owners of the organization. Currently, there is a phase of evolution in the finance industry, wherein accounting was transformed from the erstwhile bookkeeping. Currently, the aspect of reporting is taking over accounting. Due to the current digitalization era, accounting has been transformed towards reporting, wherein a professional is required to understand generally accepted accounting principles, that is, GAAP, and work within the conceptual and regulatory framework. Auditors verify and certify the authenticity of accounts of a company by auditing the accounting process and financial statements. Auditing is a professional job, and is done by the persons who are formally trained and qualified for the purpose. The audited financial statements of an organization are of interest to several stakeholders. These stakeholders analyze the documents. Shareholders would like to know how well the management is performing. Apart from shareholders, other stakeholders, like managers, clients, suppliers, regulatory bodies, creditors, investors, financial analysts, government bodies, etc., will be analyzing the audited financial statements carefully. In this video, we learn about the role of accounting in an organization. We understood the significance of financial statements in the accounting process. We also learned the importance of auditors in verifying the entire accounting process and the data